Okay, my beautiful friends, and yes, you're all beautiful, and I love you. That's the truth from my heart. We're a big family, and I'm in a great mood right now. Why am I in a great mood? Because we're together, and that's what matters, and it's Friday too. So tomorrow I get a day off, my only day off really, because I even, I do a market to look ahead on Sunday. Anyway, look, it's a freak show. Let's just establish that. Let's put perspective on what's happening here. Because if you were to turn on the mainstream propaganda ministry, they don't know what's going on here. Earlier today, the story out of the propaganda ministry, because the market was lower across the board, the story being pushed by the mainstream, CNBC, Fox Business, so Bloomberg, it's always the same, was, this private payrolls number, it's unbelievable. It's the best we've ever seen. It just proves our economy is so strong. Well, the narrative was stocks will lower, markedly lower at that point, because the Fed's going to be really aggressive because our economy is so strong. Well, all of a sudden, this kind of reversed here. And now they don't know what to say. Dow Jones Industrial Average put on a gain, not much, if I recall, roughly 0.25%. S&P 500 fell about 0.15%. NASDAQ got hit about 0.5%. But we're talking well off of the lows here. Okay, so now they're like, well, why did that happen? You can't make this stuff up. Makes me laugh. Probably makes you laugh too. So yes, we got this, it's fake. It's fictitious. It's made up. Just like every other freaking data point, all right? We're moving into an election cycle here. You know how it goes. Blow sunshine up everybody's crack. Tell them how great everything is. Try to convince them that what they're seeing with their own eyes is not real. But, talking about that, in my opinion, and I want to hear from you, in my opinion, the reason why the stock market didn't really sell off today was the 10-year yield. It's stabilizing. Okay, yes, we had a 30 basis point hike in the 10-year yield, or a spike, in just a couple of days. That's enough to get anybody who's in this market rattled, because we know what happened last time. We watched stocks crater as we had that uncontrolled spike to 3.5%. Well, market didn't like that very much. But what happened today? Well, the 10-year yield stayed mostly flat. So what can you and I take away from that? Well, one thing. The Fed is buying. Look, I've been explaining, in fact, this morning when I covered the spike in the 10-year yield, I said my best guess, and a lot of you seem to agree with me here, was that the Fed is not ready to allow the market to melt down. They were going to get in here and start buying more. And I really think that's what we're seeing here. What's preventing the 10-year yield from selling off, or the debt market from selling off? The 10-year yield is the benchmark. For all of you new people, and there's a lot of you who've been writing to me as of late here, the 10-year yield is the benchmark rate. That's where everybody looks. Okay, that's the most important part of the yield curve to look at. Okay, so 10-year yield, very important. Can't stress that enough. Okay, we got that. So the fact of the matter is, today, we'll see what happens next week. But the 10-year yield being stable, I believe, at least in my view, that was, a sign to the market. Hey, buy. I bought today. You all know what I'm buying. I'm buying one thing right now, ticker JEPI. Yes, it's a JP Morgan product. Oh my. But I like the way it's structured here. All right, I've covered this before. Please do your own research into this here. Am I supporting a criminal organization? Well, do you transact in fiat currencies? Are you not supporting the Federal Reserve and ECB, whatever central bank's rulership you live under? You can't sidestep the system they've created. It's impossible to do unless you're going to go on some kind of a barter system. If you go to a store and you're using your ATM card, debit card, paying off a mortgage, car loans, go to the store to buy food, you're supporting public enemy number one, and that is the Federal Reserve. So don't go yelling at Greg Mannarino because Greg's buying a fund, a JP Morgan fund here. I like the dividend. It's a massive hedge against the market. I've been buying a ton of this stuff lately, honestly, huge. And I will continue to buy some. Look, in my view, what we saw today, and we'll see how this plays out next week, if the 10-year yield remains stable where it is or doesn't continue to spike, all systems go. The market's going higher. You understand? Period, the end. So just everything else notwithstanding, the environment remains risk on, meaning cash is going to make its way into the stock market here. You understand? I'm not saying you need to be in it, although I can't imagine you want to stay in the dollar. Yes, of course, you need to be hoarding, stacking physical silver, gold, platinum, palladium as well. I love them all. And I think commodities are a good spot to be as well. That's all just in preparation for the implosion that will happen in the debt market. But in my view, gauging from what we have witnessed today at least, okay, some stability. Clearly, we were seeing some instability in the debt market. All these gyrations lately. I covered this recently here. Now we're kind of stabilizing. And who's responsible for that, people? Really, do you think it's the average guy? It's the average girl? No, absolutely not. It's the biggest rigor of the debt market in the history of the world, and that is, of course, the Federal Reserve, public enemy number freaking one. So on the back of the stable 10-year yield, you have a nice reversal in the stock market here. Dollar markedly stronger today. The relative strength or comparative strength markedly stronger. Bitcoin around 23,000. Gold and silver under some pressure here. Crude oil not doing too much of anything here. Relatively flat. So if you look at the market, believe your own eyeballs, use your own intellect, you can see what's going on here. That's my take on it, people. And for the most part, like I said, I asked you to comment, and I'm reading through the comments, and some of you do believe that this is it. It's imploding right now, and I know where that's coming from. But most of you don't think so. Most of you believe the Fed's going to get in here and stabilize the debt market. I am in that camp. I do not believe in any way, shape, or form that central banks are done inflating. And I can tell you something else. Our loving, caring moronic members of Congress here, they're going to be playing the game too. Okay? $4.5 trillion so far for COVID. Monkeypox, another who knows how many more trillions are going into that. And then we got now this whole fear campaign with polio. Okay, another one. They're going to keep, playing the game that they know they have to play to keep the central bank here and keep the financial system functioning. There's not a single member, not one. I don't care who and you may believe they do, but there's not a single member of Congress who will tell you the truth, how the financial system works, and the fact that they work for the Federal Reserve. They all work for the Federal Reserve. Period, the end. And you're never going to hear from a president, current president, you didn't hear it from the last president or the one before that. They won't explain to you that the debt-based system demands that more debt be borrowed into existence, and we can't stop. Imagine if, President Trump would have actually said, hey, everybody, I got a big secret to tell you. The more debt that a central bank issues, the stronger they become. It's an unstoppable force. Imagine if President Trump would have said that, or Obama freak, or this current imbecile who, I don't know what his issue is. I think he's just retarded. I know you hate that word. So many of you hate that word. Whenever I use that word, I lose subscribers. But I get him back anyway. Look, I don't know another way to describe the man. He's a con artist as well. He's playing the senile old man as a plausible deniability cover in my view. But I think he knows exactly what's going on here, along with the zombified Pelosi, who really, you look at that thing. I can't tell if she's alive or dead just by looking at her. She looks like, Night of the Living Dead. in my view. I want to hear from you on that too. So anyway, so a couple of things here. In my opinion, central banks aren't done. What we witnessed today, we did not see the 10-year yield continue to spike. So someone's in here stabilizing the debt market here. But we should also keep in mind that the yield curve most inverted since dot-com bubble, since the dot-com meltdown. Does that mean that another meltdown is coming eventually? Sure it does, but it's a whole new ballgame now. You can't look at the past and use the same gauges that you would have used now. It's a completely different ballgame here. And I think most of you have a good handle on that. I really, really do. But we're not going to change anything that we're doing here. All right? Betting against the debt, becoming your own central bank, preparing yourself for a worst-case scenario to unfold. I still believe it's a way off here. And I know that I'm going contrary to some pretty big YouTubers, some with way bigger channels than I am, calling for a crash this month, and then now it's going to be next month, and maybe it'll be the month after that. But you and I never have to guess. You see, that's the thing that they're never going to tell you, these people. Understanding that by just watching the flow of money, just follow the money, and you're going to know when the big one is going to actually happen. And we've seen it before. That's an uncontrolled spike in the 10-year yield. What happened? ECB jumps in, Fed jumps in. And right now, I think we're seeing the effect of that too. And we'll see more of this as we move into next week, people. And I don't want these videos to be too freaking long. I could go on and on and on. But anyway, you have a great handle on what's going on. I really feel that way. I will cover more with you on Sunday when I do my markets. I'll look ahead. But before we do that, before we part for, one day, I'll see you Sunday. I want you to bring it in like we always do. Let's end the week the right way. Are you ready? Love each other. Care about each other. Be charitable. People, this guy, honestly, I love all of you. We're a big family, and I really believe that with all my heart. Please comment. I will read the comments. Share the video, and I'll see you Sunday.